Alright guys, welcome back to another video. We're heading into the first full trading week of 2026, and there's a lot going on that's going to shape up the markets pretty early in the year. And in this video, I want to go over my active positions for the week, framing around the macro environment currently, and some of the trading stuff that I'm looking at for this week on gold specifically. So we're going to do this every single week, and then we recap the positions at the end of the week. If you guys didn't see, I've already posted last week's positions, how they concluded, all the money earned, and my actual strategies on that. That's already been posted. You can go back and check my last video for that. But with this video, we're going to be breaking down key macro drivers for the week, how I'm framing gold and equity risk, and then I'll get into how I'm positioned on the option side of things with my cash secured puts and covered calls for the week. So one thing I do want to start off with is going to be the whole US-Venezuela situation. Obviously, that is a huge escalation and the market has reacted accordingly. Over the weekend, the US military launched strikes against targets in Venezuela and captured their president. This is a major geopolitical escalation involving the US and has already influenced the markets very strongly. Energy stocks and major energy indexes have already rallied. US indices like the Dow hit record highs as financials and defense also gained, especially in the commodity section. Crude oil and precious metals like gold and silver saw a lot of strength because traders obviously weighed in that geopolitical uncertainty. I was talking about this from a chart perspective, actually in my video going over what I'm framing a gold trade on. This executed absolutely perfectly. I actually was not involved in this trade. As I said, I like this area of interest that we had tested here. We did respect this swing low, and I was waiting for a clean break and retest of the 50%, which we got exactly as is. So if this trade did get executed, this would be probably one of the cleanest entries I would have ever seen. In front of you guys, I was targeting these highs right here. Unfortunately, the reason I did not take this is because we had a big gap up right here. As you can see from overnight, from literally January 2nd to January 4th, we had a massive push during gold's Asia session, validly with everything that's going on in the world. But unfortunately, that doesn't give me a good spot to place an SL. And with me not being confident where to place an SL, I'm just not going to take the trade in its entirety. Now, I do think gold is going to continue rallying up. With that being said, I do think gold will continue to climb up over the next few weeks. So I will be going onto a lower time frame and looking for an entry to get kind of more of a confirmation and a sneaky little entry on the lower time frame that I can use to actually get involved in this move. This is one of those times where I step back, I don't get annoyed or have FOMO where I missed a trade. This is one of those times where I can understand, hey, this did happen. I liked it. I was correct. And that is the biggest thing, being correct. And now I can just take my time and look for a more structured entry. So with these kind of events, this creates a flight to safety interest and obviously pushes safe havens up, but also rallies in sectors like energy and defense, since investors are going to anticipate the future of oil supply access. These are huge narratives. The rally isn't just technical, it is tied to expectations about energy markets and risk sentiment. In terms of the gold trade, that is what I'm looking at. I do just want this to continue to the highs. And like I said in my last video, considering that we are reaching back to these all-time highs, I do think gold has a lot of room. And I do think that a early positioning this year will yield very nicely for a longer term trade idea. Coming into this week, behind the geopolitics, we actually have a week full of real data. We have ISM manufacturing on Monday. We have ADP non-farm employment change on Wednesday, along with JOLTS job openings and ISM services PMI. And we also have the average hourly earnings, non-farm employment change, unemployment rate, along with the prelim UOM consumer sentiment and expectations all on Friday. So this is going to be a pretty big data week, I would say, and this will help me frame a macro bias that should help myself support gold and the gold trade that I'm looking to take. So again, this is one of those times where you and I will be listening for whether employment data continues to show strength or whether inflation is going to pressure and ease enough for future rate cuts or a dovish Fed tone. Crypto is also watching labor data. Bitcoin is a good risk asset that is tied to sentiment as well. So not just equities, and you can use that for a bit of a confirmation of, where risk sentiment is currently at. So we're entering into a unique 2026, especially from a macro inflection point. Markets did rally in 2025 with the AI optimism and the easing conditions. There is a bit of a fragile market equilibrium here where flows and positioning is a little bit crowded, so macro risk still does exist beneath the surface of all this. Geopolitical events can tilt markets quickly if they persist or escalate. So this week is a lot about context, not short-term signals. The data will say one thing along with the events that are going on in the world that could be saying another. Obviously, something like this Venezuela situation is going to potentially drive gold even higher. But if the data comes in pretty weak or pretty strong, I should say, that's going to, influence gold on the reverse side. So how I'm framing all of this with all the macro noise, I'm not trying to trade the news or chase reactions. Instead, I'm kind of asking myself, does this add weight to one directional bias or another? Is risk sentiment rising or cooling? Are markets pricing in uncertainty or complacency? And right now, early January is very noisy. We have a lot of geopolitical tension right now. It's feeling very defensive and risk is positioning itself. Labor market data and the PMI data will give us a good direction on the monetary policy side of things and the growth expectations. So macros in combination are going to create me a good backdrop. And this is what I'm factoring in right now, not just one point or a headline. And this is how you build a true bias. You're not just looking at what's going on in the world, you're looking at the data as well. And you're trying to balance all of that out with the seesaw example that I gave in a past video. If one seesaw side is, very well weighted, then you do have a good answer. If you're weighted right in the middle, that's a little bit confusing and you don't want to risk a trade on a coin toss. All right, jumping into the options positioning now. This was a very interesting week for me so far, even though we're only on Monday. I sold some more cash secured puts on IREN because I did want a lower cost basis. As I've been saying for like the last 2 weeks now, IREN has ripped almost 13% today. So great recovery on this. I was down pretty large, as you guys know from my past videos. I sold some cash secured puts just honestly because I wanted to average in on this. I'm comfortable owning it at these lows right here that we have. But my shares are around $51 and I do have a covered call set at $53. So this will make up for the shortfall that I've had with IREN just continuously trading down over the last couple of weeks. I'm very, very happy to see this stock recovering. I think it is going to do some great things. I would like it personally to expire before tapping my covered call position and expiring above this area, because I would like to ride this a lot higher and sell in the money covered calls and earn an even bigger premium. Next on the list is another greatly positioned pick. I'm very happy that I was filled on this position early this morning. It's going to be on Bloom Energy. The volatility with the premium was very good, and I was fine with owning it at the price drop. But with this massive rally that we had, we're pretty safe to say that we are clear of a retracement and getting a sign on this. Again, I'm not bummed about that. I couldn't really care less in this particular situation where I had a great premium with this stock pick. So I'm happy to take the premium and walk away. If Bloom does for some reason come down and expire in the money on this cash secured put position, I won't mind owning it at these lows because we do have some good support levels. So I do think it will have a quick recovery and I could sell an in the money covered call. Next on the list, we do have CoreWeave. I am very heavy in this position this week and it is objectively riskier. Like I've been saying, I am looking to start kind of getting out of my comfort zone and trading companies, that are a little bit on the riskier side, but this is how I navigate the markets. I'm looking to expand my knowledge. I'm looking at companies I still like, but maybe aren't, exactly trading at their all-time highs or doing stuff like Apple or Meta, where it's a very, very completely safe pick. Again, this is not financial advice at all. This is just my opinion and how I'm playing it. We do have a good support level at these lows right here. I am currently pretty far away from my cash secured put still. We did have this good impulse of price right here. It looks like we are making a retracement. We are trading above the EMA. So I am kind of hoping that we just continue up to the highs there and all we were doing was creating a higher low here. Again, no harm, no foul if we do expire in the money on this. If we do get assigned those shares at this price, I still think this has a lot of upside currently, and I will be looking to sell some covered calls on this for the time being. We are trading very low from its all-time highs, so this could be a very good play if I'm positioned correctly. A quick reminder on this is these are weekly options again, and they're going to be expiring at the end of the week. I'm not looking for big directional moves. I'm just kind of getting paid for probability and time decay. There's minimal management this week, so that means I want these high probability setups. I want premium decay to do the work for me, and I want flexibility heading into data and volatility. This also aligns with what I said earlier about not forcing trades and just kind of getting paid to wait when the odds are already in my favor with how the market is currently rallying. Again, on the call side, we are running a covered call on IREN, just above my share position right here. We also have one on Palantir that we're basically just selling for pennies on the dollar. Palantir did have a huge drop, and I am just kind of back holding it until we can get a good push from that, and then we can kind of decide what to do. So I'm not upset with just earning pretty much nothing on these covered calls. This is an interesting play with how much IREN has recovered, but Palantir is just kind of lagging behind. Again, it's one of those things where we have to be patient. If price doesn't want to move where I want to yet, that's fine. I will get paid for the opportunity either way when it's presented to myself. Wrapping all of this up, I do want to just say that this week is about observing macro reactions. Positioning with probability is going to be doing the work for me. I want to let these weekly options decay, and I'm not chasing any of the headline moves right now. We do have a very packed data week, along with a lot of geopolitical stuff going on right now in macro headlines. So this is where I don't need to prove I traded in week 1. I want to capitalize on high odds setups when the market earns it. So to wrap this up, geopolitics and labor data are front and center. Markets are reacting to risk, assets, and safe havens. I am already positioned with my weekly options with cash grid puts and some covered calls. Gold is being observed again, not rushed. I am going to start looking for that lower time frame entry, so I will keep you guys updated. I'm mostly just stacking my bias right now and not forcing my execution. Just remember that macro isn't single events, it's how events are stacked and how they interact with each other. I want to see a lot of the truth and not noise with this. So I'll keep watching, refining my bias, and aligning my positions with data and price structure. If you guys found this video useful, make sure to leave a like, subscribe, and leave a comment with any questions that you might have. And with that, we'll see you guys in the next one.